And I really didn't have any venture scale experience. Today we manage well over $1 billion of capital, but at that time I had, maybe 10 angel investments, $50,000 each or something, maybe a year or two into it. And I just thought there has to be a better way. There has to be a way to innovate around this early stage of angel investing and almost professionalize it. I definitely encourage people to make it simple and make it catchy and make it really ambitious.
David, you're very welcome to the ScaleX Insider podcast. Really delighted and thrilled to have you on the show today.
Thanks. Happy to be here as well.
Yeah, brilliant. I'm really looking forward to the conversation. I've shared with you before, our vision is to inspire, connect, and enable millions of ambitious leaders of small and medium-sized enterprises to scale with purpose. So, David, what does scaling with purpose mean to you?
Well, I'm maybe too literal of a guy, but I think it's the opposite of scaling without purpose. Scaling just for the sake of scaling doesn't sound very interesting to me. I think it's really doing it, scaling because you have an end goal in mind. You have a change you want to create in the world. In the case of Techstars, right, we want to help as many entrepreneurs succeed as we can all around the world, and that sort of requires us to reach more of them and scale. And so we're not really doing it just to do it. We're doing it because we want to reach that purpose, live that purpose every day, helping more and more entrepreneurs succeed. So I just, I, I feel like it just means leading with that purpose, and that is the reason behind the scaling.
Yeah, I really, really like that. And you've mentioned Techstars, the incredible company that you've founded and continue to chair. And can you share with our listeners the origin story to Techstars and a little bit elaborate a little bit more on why you guys exist?
Sure, and it's a 17-year story, but I'll try to do it quickly from the sort of origin. But so people have context, we're I think the most active seed investor in the world. We fund almost 1,000, probably about 850 companies a year now, using this accelerator model that we helped to pioneer. And 17 years ago, the story was at the founding that I had been doing some angel investing and was pretty dissatisfied with it. I thought it was a great way to turn a medium-sized fortune into a smaller one. And that wasn't really, what I wanted to see happen. I wanted to sort of keep the medium-sized fortune. And so, maybe even grow it, right? And so it was this sort of general dissatisfaction with what angel investing was, meeting people in a coffee shop and hearing their pitch and writing them a check and then not hearing anything for a couple of years until they needed more money, sort of pretty unsatisfying experience. That was one of the reasons to start it. But the other reason was because I was sitting, in my hometown where I live in Boulder, Colorado in the US. And it's a small town of 100,000 people or so. And I really wanted it to be a better place to invest and a better startup community. And so, the dual purpose of creating Techstars was really to create a better startup community here in Colorado, which we then, of course, expanded to lots of places in the world, but also to sort of find a better way to do early stage investing that wasn't very satisfying for me. And, at the very start, I had a co-founder of several businesses named David Brown that we brainstormed this idea together. I went in and got a random day meeting with a guy named Brad Feld, who's a great venture capitalist here in Colorado. And in this 15-minute meeting, presented him with this idea, slid a little piece of paper across the table and said, "This is what I want to create. It's Techstars." And he said, "I'm in." 10 minutes into the meeting, he said, "I'm in. I'll invest. I'll help you as long as you're not a crook or a flake." We just met. And so we worked together a little bit, and I guess he figured out I wasn't either of those things. And he ended up investing. I never knew that was how venture capital worked. So simple, 10-minute meeting. It's not, by the way. But Brad was behind it right away, loved the vision, introduced me to a guy named Jared Polis, who today is our governor here in Colorado, but at that time was really a well-known, successful entrepreneur here in Colorado and built several very large companies. Brad called him up, said, "Hey, Jared, I just met these two guys. I'm investing in their thing and you should do that too." And Jared said, "Okay, I'm in, I'll invest." And by the way, Brad, what is it? And I learned, oh, okay, this is how networks work, like it's just trust. And I don't even need to know what it is to co-invest with somebody that I trust. And, the four of us founded Techstars, and I was the original managing director running the original program in 2007. We funded 10 companies that year and had a successful result. And from there, began to scale the concept.
I love that. It's very aligned to our own ScaleX Accelerator program and the ethos behind that. And we've recently set up ScaleX Investments as well, a syndicate of investors to invest in our own community. Did you have any investing experience prior to this? You mentioned you'd done a couple of angel investments, but had you any significant investment, beyond you had exited, you got this pot of cash, and you were kind of meeting people in coffee shops to invest in,
Yeah.
but beyond that, no real investing experience.
No, I didn't come from a financial background. I was a geek and a hacker and a programmer. I was the prototyper in my earlier startups that I had created. I'd done a public safety dispatch software company, dispatch. I think today we've dispatched like 20 million ambulances through that software, which is pretty crazy to think about. But I was the prototyper. I wasn't the developer you really wanted to build it for good because it would fall apart at some point, but I could show the idea pretty quickly, and I was a decent sort of hacker. Started a couple of companies. That was one of them. Another one in the music social networking space. And had some success and some luck and some exits, and so my only experience was sort of maybe a dozen angel investments, and I just thought it sucked. I thought it was just not a, as I mentioned, not a great experience. Um, and I really didn't have any venture scale experience. Today we manage well over $1 billion of capital, but at that time I had maybe 10 angel investments, $50,000 each or something. And it was pretty, maybe a year or two into it. And I just thought there has to be a better way. There has to be a way to innovate around this early stage of kind of angel investing and almost professionalize it, which is what we aim to do by building community around the accelerator. And then a few years in, we started raising small venture funds to sort of follow on in the companies that went through the accelerators.
Fantastic. And somebody listening to this can quickly overlook the fact that actually you have started up and scaled very successfully Techstars itself. So it's a scaling success in its own right, let alone the fact that you're the most active investor on the planet through the Techstars medium. So incredible. What, 15 investments a week on average, just on the quick maths. Can you share with our listeners some of the challenges that you've encountered in scaling Techstars itself from a couple of guys who met in a coffee shop? You've created the vision on the back of an envelope, and now it's a household name in the investment world.
Yeah, I mean, there were, as with any company that you try to scale, many, many challenges, many of them ongoing. I think today we're still relatively small as companies go. We're 300 people, but we operate all over the world, and I think it's 16 countries and 50 different cities, and kind of have core offices in Colorado and New York and London, but people sort of all over the world. So one of the big challenges has been as you scale an organization that is so geographically distributed, how do you sort of maintain culture and values, most importantly? How do you make sure you're hiring within those values and firing, where those values are not upheld? Um, that's certainly been a challenge, and getting everyone to sort of be rowing in the same direction, even though a lot of the team might live in a particular place, like in Amsterdam or in Singapore, right? Communicating is a challenge in the context of such a globally distributed company. I think the other probably big one that has caused some sleepless nights over the years is like any investment business, capital formation as you're scaling is a challenge because, you start by investing in 10 companies a year, and then you move to 20 and 40 and 80 and 200 and 500 and 800. That is, you're always raising money in advance of those returns to enable that scaling. And it's not money for the core business. It's limited partner capital for the actual investments that really, sort of scales very quickly when you do that. Not to mention that you're trying to also follow on after the accelerator in those same companies. So it takes quite a large quantum of capital, and it's always a challenge to kind of get to the next level of that with institutions. So I'd say those are probably some of the top of mind areas that were challenges.
What about you letting go? I'm assuming that you hosted the very first accelerator program and as a way of sharing your experience given your startup, scale up, sell up success. Um, what challenges did you have in actually recruiting scores of other hosts who essentially were going to take your baby and and bring it to another region? How challenging was that to find those hosts, to train them, to kind of essentially hand across your IP, hand across your baby?
Yeah, a big challenge, especially given that it's all over the world. So, when we first started to expand in this way, rather than trying to do everything in Colorado or everything in New York or everything in San Francisco, we really believed in this scale model of having, 10 or 12 companies, an intimate setting, really deeply connecting them to the geography they're in. And so we had this notion in a playbook that we developed, which we took the time to write down and really, build over the years. We had this notion of early on kind of the Brad and the David. And, the Brad was the prototype of the really well-known investor in a geography. And the David was the lesser known, someone like me that, had a lot of energy for it and wanted to do it all day, every day, and sort of run the thing in that geography. And we called the David the managing director. And we just called the Brad, really the local investor, right? The local sort of well-known, notable venture investor. And so, we used that model to go to Boston. We went out and met Bijan Sabet of Spark. He would sort of play that role in Boston for us. And then Sean Broderick, was an early, who's now actually at SOS Ventures, small world, this world. But we, sort of had that model and tried to do that in every city. So we went, to Seattle, that's Greg Gottesman and Madrona at the time, now Pioneer Square Labs, which we're also investors in. And then Andy Sack, right, would play the role of David. So we always tried to find those people that could play those roles. And, eventually I became sort of CEO as we got a little bit more organized, a little bit bigger. Nicole Glaros kind of took over as managing director here in Colorado and would be with us for 15 years. And, as we continue to build that playbook, now having some kind of organizational structure, there were kind of two sort of key pieces to build: the executive team on the one hand, which would be the CEO, myself at the time, and, sort of a team that would actually run the business, and then the team of managing directors who were in the local geographies. And, we built a playbook, and literally in the beginning, either I or Nicole would move for 3 months to New York or to Austin. I moved to London in 2012 for a few months, and that was brute force. Let's make sure this is really good. We need to be there on the ground, learning how to do it, learning how to adapt to local customs and different geographies, uh, documenting that in the playbook until we realized, hey, that's not scalable. We need to be able to hire someone and train them without having to move somebody there for 3 months. And so, we just sort of developed this system over time where an experienced managing director would help in the first year in a new place, train a new managing director, kind of be a buddy to them. And, developing the playbook was really key, learning how to do it. And I saw this too as an early investor in Uber, in their angel round. They were great at building playbooks, learning from mistakes, updating the playbook, and sort of following it in every geography they scaled to. And, you have to do it slowly enough that you've got the playbook right, before you really step on the gas.
When did you see things really accelerate? Because what we see within those SME leaders that come into their own community, there's a level of impatience in terms of the, I suppose, the success or otherwise that they're realizing. You know, is this 3 years, 5 years? Was it year seven, year 10 before you really started to see the hockey stick kind of growth? What was your experience of that, David?
Yeah, I mean, in the beginning, it was sort of in phases, and I think you get to a place where you have confidence about the next phase. But um, in the very beginning, the first year I was a managing director, we ran the program in Boulder, and within 12 months, we had returned all the invested capital and some. So we had some exits pretty quickly.
Amazing.
Small, but it didn't take huge exits to sustain the model. Like one $10 million exit sort of got us there, right, to pay for the year. Um, and seven out of those 10 companies would eventually be acquired. One is still going today and is quite a large company. But we sort of knew, okay, after one year, that worked. Cool, let's do it again. So it was not, let's take this somewhere else. It was let's do it again. And so we did a second year and had a similar result. And coincidentally, in I guess that would be 2009 or 2008 thereabouts. Um, Y Combinator was in Boston and had just left. Y Combinator would go on to promote the message that you need to be in the Bay Area, and that's where all the great companies start, even though they didn't start there. Ironic. But they left a void in Boston. And so what we had is some mentors from Boston, some investors from Boston taking note of what we were doing, and we started to feel this pull, right? It was like, hey, we want what you have. Bring your mentor driven program where it's open to the community, unlike what we had before, to Boston, and we will support it. Brad, had a background, was at MIT, had a lot of connections to Boston. And so we raised a fund for Boston, I think over a weekend. So it was sort of like the first pull we got was come to Boston. And we decided, okay, let's try it. That's a good scale model. It'll keep the thing, what it is, but replicate it to another location. Can it work in a big city, not in just a small city? And we did that for a year or two and realized, okay, yep, it does work in a big and a small city. We felt more pull. We were pulled by Seattle. We were pulled by New York. And we were kind of just reacting to that very strong pull in a very limited way. Now, we were getting some pull from, random places as well that, were overseas or even places like Chicago, which is a great startup community. We were feeling pull early on, but just weren't ready to kind of go that fast. So we thought, well, let's go from one to two to four, kind of double a couple of times, and let's feel what that's like. Build this playbook, see what the problems are, make sure it's really working in all these different contexts. Then I would say it was around 2012. So to answer your question, I guess that's 5 or 6 years in. Um, we really sort of built a plan to react to the poll. We weren't pushing yet. We weren't going out and marketing ourselves, but we were just fielding this sort of inbound. We did end up going to Chicago and partnering with Accelerate Labs to kind of acquire that into Techstars. Going to London in 2012 to work with John Bradford. He had built a thing called Springboard, which we acquired into Techstars. Uh, and started working with corporations that same year that were pulling us to build ecosystems like Microsoft and Nike wanted to build ecosystems around their technologies like Microsoft Azure or the Xbox system, motion control system, or just Nike sports in general. And we started to feel this pull from communities, whether those were physical locations or corporations who wanted more startup action around their ecosystem and began building models. But really around that time, there was 100 opportunities and we were still being selective, not pushing, not marketing, but reacting to pull. The next phase is we would sort of convert to, okay, let's be more deliberate about where we'd like to be and start, marketing and pushing in those directions. But that was probably not until more like 2016 that we started shifting into an outbound mode and like, let's really scale this rather than just reacting.
At what point did you craft a vision to not only address, I suppose, the unprofessional way angel investing was done in Boulder, Colorado, but that you decided actually, I feel obligated to do this globally? At what stage on the journey did you actually put pen to paper to craft a vision that said that you would take this to the world?
Yeah. So um, it was around 2012, around that same phase where we were feeling all this pull. And, we had, I guess we're 5 years old at that point, and we give away these gold t-shirts when your company's acquired. And, 5 years in, we were probably at number 12, right? And so people have a Techstars gold t-shirt that you can only get if you're acquired or you IPO with a number on the back of it. Today there's 460 of them I
My
think in
word.
the world. But back then there were a dozen. You're sort of going, wow, we're really impacting these people. And the entrepreneurs are telling us that it was a life-changing experience, that they got connected to a network, that they felt like somebody for the first time could take a chance on them, that they had never been supported in this way, that the relationships they had developed were for life, and that, they might not have had a shot at even accessing venture capital or accessing this type of opportunity without Techstars. And that started to feel, very aligned with the mission, the purpose that we had, which was helping entrepreneurs succeed. And we sort of built this plan in 2012 we called 15 by 15 by 15. So by the year 2015, we wanted to have 15 different city programs and 15 different corporate programs, scale both of those dimensions. And, at the time we were, maybe we were in 6 places or something like that. And I remember the team saying, no way, that's impossible. You can't get to 15 plus 15 is 30 different things by the year 2015. And of course they were right, but we got to something like 25, right, instead of 30. And so it was the push, right, to let's go do it. Let's scale this because we built something valuable. We now have this network that has these mentors and investors in it that can really be a tool to empower entrepreneurs to be successful. I felt this obligation that was very aligned with the mission to really scale it. And so it was deliberate starting around 2012.
Yeah, I love your 15 by 15 by 15. It's something in my previous role within a company that I was there for 17 years, CEO for 12, exited back in 2019. But I always found um, being able to articulate the plan or the framework of your vision and how you were going to execute in something as simple as 15 by 15 by 15 was quite powerful. We used to talk about 5 by 8, 5 sectors and 8 different strategic regions across the globe, which was 40 places that we were going to play in. And when we started to dream about what $1 billion company would look like, this is starting off $5 million, and kind of scaling then to 100 million, $150 million, and starting to dream about what $1 billion would look like. And it was just a case of testing, going into each of those boxes. In North America, in sand and aggregate, for example, is there a $25 million market? Yeah, we don't need to do any research. There definitely is. And you went across each of the boxes and kind of filled 40 boxes with $25 million each and go, actually, there's $1 billion business here. And whether that's through a combination of organic growth and acquisition, like, it's tangible, and we can start talking about this. And how important do you feel that is in terms of just making it simple for people
Yeah,
to comprehend?
huge. I mean, back at that moment in 2012, I think the idea was like, let's just have more, like, I don't know, 20, 20. How long should it take to do it? I don't know. It shouldn't take that long. Let's give ourselves 3 or 4 years. So 15, and really 15 by 15 by 15 was really just a way to say like that's probably not doable. It's sort of a Google style goal, but what if we did it, right? And the reaction is what matters, which is, oh, that's a challenge. And that's exciting. Like, if we have 30 locations, we'd be helping 300 companies a year, right? Because we're doing one a year at that point and in each location. So people could start to envision like what that really meant. And it was easy to remember 15 by 15 by 15. I could have said 10 by 10 by 15. That would have been ambitious also. We actually exceeded that by a little bit. But I definitely encourage people to make it simple and make it catchy, um, and make it really ambitious. It's okay that you don't get there, right? If you get 80% of the way there, that should be amazing. I'm a big believer in that. And then, yeah, people start talking about it and they say, we got to get to 15 by 15 by 15. How do we do that? Right? Like it becomes the thing that everyone's thinking about strategically.
Yeah, I love that. So, so, so powerful. We talk about, the importance of keeping it simple, simple scales, complex feels, which is why we created the 10 principles for scaling, which the fundamental truths that belie every scaling success. I think today, if you type in to Google how to scale a business, within half a second it'll return something like 2 billion search terms. How do you kind of navigate through all that noise? So 15 by 15 by 15 is a is analogous to really keeping it simple. You've mentioned, 460 gold t-shirts. I love the gold t-shirt, by the way. It's a lovely celebration and acknowledgement, and almost something that is to be sought after, to be prized in many respects for the entrepreneurs coming through your community. 460 successful exits, thousands of investees. I want to get into the magic sauce. At this stage, what are the characteristics of startups that come across your desk that you're confident with those characteristics gives Techstars a high degree, high probability of success?
Yeah, well, it's interesting the way you frame the question because I don't think we're always necessarily looking for a high probability of success. In aggregate as a portfolio, of course you want that. But one of the things you're actually looking for is a, sort of risk, right? Risk that the thing that they're doing is going to be adopted, sort of market risk or adoption risk, or just risk that the bet you're making is right. One of my favorite books is Thinking in Bets, right? Everything is it's not, I believe or I don't believe. It's I have a 70% belief or and we back plenty of startups that we have a 10% belief that they're going to be successful. And we certainly want to try to increase those odds. But what if they were, right? They could change the world. And, that's why you have portfolio theory. So you are actually looking for some amount of risk when you're looking, but you're also looking for, no team risk, right? You want to eliminate the risks that are big problems early on. We invest at the earliest stages, right? A couple of people, a dog, and an idea, typically. They don't all have dogs, but an awful lot of them do. And most of them have ideas. And so, we don't want to take any team risks. We want to believe really strongly, that this team is going to stay together, that they have a motivation that's intrinsic. It's coming from inside them. It's not about their greed or, making money. It's about changing the world.
So tell me more about that, because how do you identify the fakers? How do you identify the people who
Yeah,
have crafted a purpose for the purposes of investment? So tell me a little bit more about no team risk
sure.
and some of the kind of red flags in there. And
Sure. I mean, most investors will tell you that they look hard for passion, and I think this is a pretty overrated word that is something that's relatively easy to fake by an entrepreneur. And so I think, sort of feeling their passion is just a prerequisite for even talking to them. It doesn't mean that they're great. Um, it's really feeling their obsession. right? I think the great entrepreneurs, and I think about all the successful companies we've been involved with, and many that have failed, by the way, that were valiant efforts and failed well. Um, the entrepreneurs, the founders are obsessed, and they're not obsessed with the product. I mean, they are as they're building it, but what they really fundamentally are obsessed with is the problem and the customer, right? And we really try to probe on the why. Big Simon Sinek fans, of course, but uh, why are you doing this and not something else, right? Why are you with this person in co-founding this company? A lot of why questions that get to their true motivation that's intrinsic. It's inside them. As an example, PillPack was a company we funded. I still use the product today. They were bought by Amazon. It's now part of Amazon's pharmacy. It's a little pack that your pills come in that you tear open and take your pills, and they're organized, right? Guys, why are you doing this? Well, we've had family members that, nearly died because they took the wrong medicines at the wrong time or in the wrong dosages, and this really pissed us off. And, my dad was a pharmacist and he lived this problem and I saw it and I want to fix this. I think it's a really big problem. That's an intrinsic motivation it doesn't lead with, here's my fantasy.xls spreadsheet, that tells you why I'm going to get rich by doing this. It leads with this purpose, this mission of like fixing this problem. And, they went on to build a billion-dollar company, right? And it's very successful, but it's it's really about your obsession with the problem over the solution. You're willing to throw the solution out if it's not right. You care about the customer, you care about the problem, and nothing else really matters. And you wake up thinking about it, you go to bed thinking about it. It's all you care about, not all, but mostly all you care about, and you are willing to dedicate 20 years of your life to it. That's sort of what we're looking for at the early stage.
And how does that differ from somebody who's passionate? How do you discern the difference?
Well, I think they probably are also passionate, but people who will say they're passionate, I mean, you probably know some football fans, to take it into a sport we all love, that, I'm a passionate, fan of, Man U or whoever, right? And they got a couple of jerseys, right? And they show up and they go to a game once a year, but can they name all the players,
Yeah,
right?
that's me you've
Uh,
just described.
okay. All right, great. I did not know that, but I sort of went with it. And I don't know, if you're really obsessed, you probably know all the players. And the same way with a startup, if you're really obsessed with what you're doing, you probably know the companies that came before and why they worked or didn't work, right? You probably have done lots of research on the market. You probably actually talked to your customers. You're not just passionate about solving the problem in a vacuum. That's a statement somebody could make and everyone will make, when they're working on a thing. But does it show up in the real world? That's obsession.
Yeah. So no team risk. What else?
At the early stage, we look for markets that are changing, growing, shrinking, going away. Markets that have been stagnant for a really long time. The internet's been around a while now. There's probably not going to be a change. But again, back to the Uber example, right? You know, taxi market changing, shifting. Maybe you could see it going away. Felt like an opportunity in a white space. So you look for a market more than an idea, and you look for a founding team that has, sort of passion plus obsession around solving a problem in that market that is big enough to matter, right? Yeah, I have to be able to imagine a very large company. People ask me how large it is. At a billion? A billion is an arbitrarily large thing. That's very big. I'd like it to be able to imagine it as a $10 billion thing, right? Most companies won't get there, but if you can only imagine it as a $20 million a year SaaS business, I'm probably not going to invest in it, um, because it's not a big enough opportunity to sort of spend our time and energy on. Um, but I think a lot of entrepreneurs really don't see that opportunity themselves. You have to help them see how to get up a level of what they care about today to where, okay, I could solve more problems in healthcare or more problems in fintech. So, it's got to be big enough. It's got to be in a market that we feel like has some white space, is changing in some way. And they have to do stuff, right? I mean, part of obsession I talked about earlier is it turns out entrepreneurs do stuff. Entrepreneurs, they don't. They talk about doing stuff, but they don't do stuff. So I had a company, Everlater, that we funded early on. Now an investor in one of their founders' funds that's a venture capitalist today. Um, he didn't know how to program, and they came for capital. I said, well, show me a prototype. I don't know how to do that. I need the capital to hire an engineer, right? I hear that kind of stuff all the time from the entrepreneur who's passionate. And, I say, well, I think entrepreneurs do stuff. And so what did he do? He went and taught himself how to program, and he built a really crappy prototype. Love it. You're an entrepreneur, right? You ran through a brick wall with no resources, and you did a thing that you'd never done before that shows you really care about this and shows you're going to go get it, and you're not going to wait on somebody to give you permission to take the next step or capital to take the next step. And I think you're looking for that. You're looking for entrepreneurs who actually are doing stuff, even in the absence of resources.
Yeah, I love that. So what I'm hearing is you're either looking for a prior track record where they've demonstrated their entrepreneurial credentials as such, or if this is their first gig that they don't stop at no, they come back time and time again to demonstrate to you guys that actually they're truly obsessed about this.
Yeah, and one of my favorite lines ever in venture capital is Mark Suster when he said, investors invest in lines, not dots. I'm not looking at you one time and making a decision. I'm following you for a while to see how you roll, what you do, right? It's the trajectory of what you're doing, the multiple data points that I see that matter. I'd rather see an entrepreneur when there's nothing and they just have an idea and then see them make progress. That's much more data for me. So yeah, and we have to make decisions pretty quickly, and typically in 2 to 4 months from when people engage with us. But that's enough time to see that they do stuff.
So no team risk, the market potential, the market opportunity. What else?
The big enough thing that I talked about, um, the sort of it's got to be something that I believe can scale and have impact. Um, the idea, of course. The way I say it is, yes, team, 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 market progress idea. So team, 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 I say it 3 times because it matters that much. That's the intrinsic motivation, the obsession, how you know each other, what you've done before, if anything. Um, Market is sort of the market dynamic, has to be interesting. I have to care about the market, have to see opportunity and white space in that market. Progress, they have to do stuff. And then idea, I put last because I value it so little. But it's sort of bonus points. And I almost put it there because I want people to know that I value it so little. Um, I always tell people, yeah, your idea doesn't really matter. Wrote about that in Do More Faster, a book that I wrote with Brad. But we started that book with, hey, your idea is worthless. Like there's no eBay for ideas. There's no place to go trade startup ideas. The reason for that is they're not worth anything, right? There's really no original idea. It's always a combination of other things, and the execution is all that really matters. So, the idea has to be at least good so that you're dealing with someone that's smart and thought about it. But we know that's going to change a lot. So that's maybe the last thing, but it doesn't matter that much.
Yeah. You know, you mentioned that the kind of the ideas are easy. Ideas are almost worthless by themselves. It was John Doerr, another very famous investor, who said ideas are easy, execution is everything. And John Doerr obviously invested in Google and hugely passionate about, obsessed about objectives and key results in the context of operationalizing a company's vision. What do you see in the context of execution? what does successful execution look like? Can you be super tactical? What do you guys want to see whenever an idea, a vision is presented in terms of successful execution? If you can share with our listeners what they should be doing on a weekly, monthly, quarterly basis to execute successfully.
Yeah. One of the things I love about startups, and I say this all the time, is gosh, there really is no like you can build some guides and some rules of thumb, but there's no playbook that's always going to work, right? It's every startup is a unique story. It's going to have unique challenges. That said, yes, I think there should be a cadence of thinking, writing, communicating with your company, your investors, your board, that you can think about on a weekly, monthly, annual basis, quarterly, annual basis. Systems like OKRs that you mentioned are great. I see some companies take it too literally, especially when they're very young. It's really just, hey, what are we trying to accomplish this quarter? And how are we going to know we did it? Right? Like that can be a pretty simple approach. But I think it's important to kind of be honest with yourself, right? And write those things down and communicate and hold yourself accountable as a team that we are actually doing those things and getting those results. And we have the right level of ambition. They're not too easy, right? That we're really challenging ourselves. And that's where your board can really help you. That's where more experienced members of your team can really help you. So, I mean, execution, obviously a very, very broad question. Creating those rhythms is important. Holding yourself accountable is important. Being ambitious is important. Um, but I think at the same time, it's a startup, and so you're operating at least early on in a space that has a very high amount of uncertainty, right? And you are experimenting. So the goals for this week might literally be an experiment or two. And failure of those experiments is expected and okay, right? In many cases. And so uh, you're operating in this environment of extreme uncertainty, trying to get more certainty every week. As you begin to get that product market fit and you feel that pull and people are screaming at you because they can't have your product or you take it away from them and they yell at you, now you know you have something and you can start to sort of focus in on week to week, how do I take that to market? How do I sell that? How do I execute against those things? It's the same rhythm. It's just now you're not as experimenting as much. Hopefully you still have an innovation flywheel, but you're really trying to make progress against things like sales or building your own team. So it changes, it evolves, but the rhythms around it, I think, are really important.
How do you guys discern between the difference between a startup and a scale up? At what point do you conclude you're no longer a startup? And on that, then, what are the fundamental changes that you expect to see?
Um, I actually don't know that I have a delineating point in my mind, but as you asked me the question, it sort of strikes me as well, it's probably around a typical sort of what I would think of as a Series C company, is really starting to scale up, right? They've proven that they've got a thing, they've raised significant capital, or if they haven't, they have some significant operating revenues to support the business. Um, I would encourage companies to continue to think about themselves as a startup for as long as they can, because it's that challenge. It is different when you really are scaling. Now you have a thing and it's just, maybe you're still a one-trick pony and you just have one product, but you really are all about scaling that and taking it to the market. It does require some different skill sets. What a lot of companies do is they make that shift completely, right? And I've even made this mistake. You go from, okay, we're looking for it, to we got it, let's scale it. And you forget to sort of look for the second trick pony, right? The second trick that the pony knows, which is what's our next product, right? Where's the innovation engine? That should still work like a startup while you've got more experienced teams that know how to go to market and really scale a thing that is working. So it's somewhere around, I don't know, that sort of 25 million to me and sort of revenue or capital raised probably means that there's something pretty real there that you're trying to scale.
And in those scaling companies, then what do you expect to see that's very, very different from the startup?
Yeah, I think you're starting to have the best players in every position rather than just really good athletes that you put on the field. Going back to our Man U, it's not, taking someone who can play any position and throwing them in the goal. Or having them play defense. It's sort of thinking very strategically about, well, who can I hire that's way better than me at that thing, at marketing, right? Or at, you know, sort of people operations and human resources. I got to go get somebody that, is way, way, way better than me as CEO at that thing, and who can also, be a part of the team more broadly and help the whole company think strategically. So it's very much about, it's not just experience. I think experience is overrated, generally speaking. Come back to that one if you want to. But it's really um, someone who can be excellent at that thing, is motivated to be excellent at that thing. Often that involves experience. Um, and you're building a team of executive leaders that are just that, a team, and they're strategic together and supporting each other. You're probably building a much better board of directors as well, which is another team that you have that's just off the field, right? Sort of like the coaches in our analogy that we've already taken too far.
No, keep it
Uh,
going.
but why not? We're football fans. So it's really about team, and it's really about role, responsibility, accountability in the context of the people that you bring into the team.
What challenges do you see the leader of that startup encounter whenever they transition, whenever they're moving or encouraged to move from startup to scale up? What's the mindset shift required? And can you share
Yeah.
with us some stories where you've seen, some people haven't made it, and you guys have had to make a really challenging decision about that person, because of course in the startup phase they're conditioned to bootstrap, to, there's a small team, a lot less process and system in place, and the communication can be shouting across the room. They're sharing pizza together. There's a different dynamic in that startup phase. So what do you see, David, in terms of the challenges that leaders encounter transitioning from startup to scale up?
Yeah, and they're huge, and I'll put it in the context of a couple of stories. One being my own story, um, and another being a company called SendGrid that I was on the board of from the time they started in the accelerator until it IPO'd. And sort of watched that whole story and played a role in sort of changing the leadership in that company a few times. And I think the stark reality is most founders are not built to scale, right? Mark Zuckerberg is extremely rare, right? Someone who starts a company and just stays with it to that kind of scale. That is only normalized because it's been made into a movie, right? It's not what you typically see. You sort of, and at the risk of scaring the early stage entrepreneurs, you typically see the founding CEO, the growth CEO, and the IPO slash exit CEO. That's the pattern I've seen with most of our very large companies. And maybe there's a few more in between there, but they're doing one of those three roles. Um, and when I think about the very most successful unicorns in the portfolio, they literally had those three, right? They had an amazing founding CEO who got the thing to a point, but basically stuck their hand up and said, I don't know what to do next. Like, they understood that they weren't the scaler. And that was me in the case of my company. When we were about 50 people, and it was clear that we were really scaling, it was very uncomfortable to me. I'm not the person who wants to manage the team and sort of, be the public face. I want to be the investor and I want to be the product person. That was what I knew about myself. And so I recruited David Brown, who was my co-founder, to come back from another company that he had gone to run our previous company and take over as CEO. And then, there came a point where I feel like neither of us knew what to do. We hadn't gone to $1 billion of capital. We hadn't gone to, you know, so many geographies, so many places. And so we made a conscious decision, 4 years ago to kind of replace ourselves again, right? And go, because we were sort of a team, the two of us, go and find an experienced operator scaler and Mael Gave, who had, built and IPO'd companies and worked at very large companies like Booking.com. Uh, we sort of self-recognized that it wasn't that the board had to force the change. We were the board, right? So we were also forcing the change as founders. So I think a lot of times what happens is the people in the seat recognize that I'm probably not the best person on the planet to go to the next stage, but they're afraid. So I like to tell the story of both Techstars and SendGrid because I'm still on the board. I'm chairman of the board. I still am very involved in the company strategically, as is David Brown, the other founder that I mentioned in the story, still on the board, right? Still involved strategically. With SendGrid, the founding CEO is Isaac Saldana, an amazing technical founder, a couple other technical founders with him. This is a company that delivered transactional email. They ended up delivering something like 2% of all the world's email at full scale. That's a lot of email, legitimate email, and they're the infrastructure. When you get a ride receipt from Uber, that's coming through SendGrid, right? If you friend somebody on a social network, that's coming through SendGrid to make sure it gets to you. They scaled it to the point where, Isaac eventually realized I'm not the right person to go to the next level. Let me start surrounding myself with more experienced people. A Techstars mentor named Jim Franklin became CEO. He scaled it until it was 10x what it was before. Isaac stayed on the board. And then we replaced Jim with Samir Dalaki, who's now a partner at Bessemer Ventures, who took that company through to IPO. Isaac's still on the board at IPO, right? And so you can remain involved while doing what's right and being obsessed with the success of the company and recognize it's extremely rare to be able to take it all the way yourself. It does happen. I think people get afraid of that, but really it's an opportunity, right? It's an opportunity to maximize the outcome, to maximize the impact of the baby that you've created.
Yeah, I love that. I'm obsessed with this in the context of creating a vision that is an organizational vision that you recognize you're in service of right from the outset. And just because you're a founder doesn't mean to say that you're going to have the required level of competence the whole way through the journey here, to actually stay in that CEO seat. And it's not getting so emotionally attached and identifying with that CEO role that ultimately you start off as the fire starter and end up becoming the arsonist. You put on fire the opportunity that is sitting in front because you won't step out of the seat. How important is the leader's mindset in all of this?
Um, well, I think again, it's different at each stage, but the mindset of the leader is something that everyone's going to feel, right? If they're coming in to say, well, I'm just here to maintain what we have and this is good enough, and we're just going to build an organization to support the status quo, that's not going to be very inspiring to people, right? People want a challenge. People want to have impact with the work they're doing. And so I think you have to make sure that whoever's in charge represents the mission, the purpose, the values, and is very aligned with the board of the company, which is an important part of companies we haven't talked a lot about, that they have the right ambition, the right framing of the opportunity. Otherwise, people are really going to feel that, right? So, and again, I think a startup founder is very different from a scale up founder, very different from a sort of exit stage or IPO CEO. They're all going to have different mindsets, and that's okay. Now, occasionally someone can shift their mindset and map to all two or three of those, but it's pretty rare.
You mentioned Uber a couple of times. I mean, you guys have been successful in supporting what more than 20 unicorns for, our listeners who are not familiar with that term, creating a company with more than $1 million market cap at that stage, and
You
a
got to do
comp.
this. It's not, you got to do
What
the
is it?
billion. You got to put your finger up like Dr. Evil. You got to
It's
see $1 billion. Yeah.
one billion. So, I mean, this is the holy grail for any founder. Given your success to date in investing in so many unicorns, David, is there something that characterizes unicorns at an early stage over and above all of the other companies that come across your desk, or is it luck? You've mentioned that one of the defining characteristics of Uber was the recognition in the early stage by the founder that going, I'm a founding CEO, but I'm not the scaling CEO. The scaling CEO sticks the hand up and says, I'm the scaling CEO, but I'm not the IPO CEO. And there's that recognition right at the outset that we want to create something great from an organizational perspective. What else characterizes in the early stages when you guys behind closed doors going, I'm really excited about this? What makes that so?
So, so let me first bust the myth that I think uh, a lot of entrepreneurs think, oh, investors, they must know, you know. And when there are two people and a dog and an idea, you really don't know. You just think there's a shot, right? And I remember with companies like Twilio or Uber or DigitalOcean or ClassPass or PillPack, right? These companies that became these very large businesses. Thinking back to the first moments, it wasn't that I went to the partner meeting. I was like, oh my God, it's Uber. It's so much better than anything else I've seen this year. It was just over the bar. It was just, one I wanted to take a chance on. And so, lots of investors will give you the revisionist history story, which is, oh yeah, I knew from the very beginning. You know, what about the eight that, failed, right? I would have said the same thing as I would have said about any of those other companies. And, frankly, they had a shot and they didn't work. And that's okay, right? That's why we invest in a lot of companies, is why portfolio theory exists for investors. um, so yeah, bust the myth. It's not that I knew something special about those companies in the beginning. It's that watching them over the first few years, and you get to a decision, well, do I make another investment in this company? It was hell yeah, right? And why do you get to that point? Because you're watching them execute, you're watching them deliver and serve their customers. You're realizing this is a really big market, and they are getting pulled into it, and they could be a leader in it. And, I don't even understand how big that could be, right? There's also a lot of talk, revisionist history. Yeah, I knew this was a huge market. Well, they had to shift around and reconfigure a bit to really access the whole market. That's the true story. So, what do they have in common? The things I talked about earlier, right? I mean, the obsession shows up. The team is very, it's not a job, right? It's like a calling, it's a purpose, it's a mission. They care about the outcome. It's not like, oh, we got to get revenue from this level to this level. Sure, that's there in the background. It's like, our customer is suffering, and we got to solve this problem for them. And, we're going to show up and listen to them and actually help them with their problems. And, oh, that solution didn't fix it, but I'm hearing about a different one. I'll go in that direction, right? Just watching them do that through the inevitable twists and turns of their story as a startup. They're reacting and they're making progress at a pace that's impressive. At the same time, they're hiring and building a team, a board, a set of investors, a set of employees, executives that are just all aligned and all living and breathing that purpose and waking up every day and going to work excited to do something about it. Right? You can feel it in those companies. And, especially when you're on a board, you can just feel that flow, that energy, that rhythm. And it's really exciting to be a part of companies like that. On the other hand, you can feel The ones that sort of aren't working, where the CEO is, well, I need to be the smartest person in the room, right? I need to hold on to every decision. Um, I know the answer. I have tunnel vision. This is the answer. It doesn't matter what the customer says. They'll tell you, well, Henry Ford would have listened to his customers. He would have built faster horses. Okay. You think you know that, but that's not the opportunity, right? The opportunity is to hear what your customers want. They're not going to tell you exactly what to build, but they're going to tell you what the problem is, right? And people you'll see companies that just don't do that well. They don't listen and they don't turn it into execution. So you sort of feel it. It's a feeling. And even when you have that feeling, you can be wrong because the problem with startups is, it's not a science. There's a lot of art. And one bad move, reputation can be built in 20 years and lost overnight, right? In a space through PR or some other crisis. There's bad luck involved. And in the ones that work, there's usually good luck involved. So it's all of these things.
Before we move into the close, the time's absolutely flown. You've mentioned failure a couple of times. What has been your biggest failure or regret, and what have you learned from that?
Um, when I think back on all of the failures, there are a lot of them in the portfolio, and there are a lot of them in my own company. I think about small failures as being part of the process, part of the story. I think when companies fail, it's painful, right? I mean, I've had investments of 5, 7, $10 million that have, come from us that failed, right? And you just thought, oh, this is going to be huge. And I hate to call them out, right? Because it's not that they're bad actors or anything like that. And I like to talk about the failures that are common that like mean a lot to me, right? And one is a company called Everview and or sorry, EventView, and you've never heard of it because it failed. But this was a company that raised a few $1 million, and we thought it was going to be really big. It was help you manage in-person events like conferences. And it was doing really well early on and really great founding team. And it failed. And they just ran out of money and they couldn't get enough customers quickly enough. And what I love about that story is not anything to do with the company or the failure. It's that the community around Techstars in Boulder, they literally carried these two guys down the street and celebrated the company in its failure. That they had built something amazing that people loved. It didn't work as a business. The community rallied around them. And those two founders today are still in the community, still building other companies doing amazing things because their failure was supported, encouraged, recognized for the effort behind it. It is going to be part of every entrepreneur's story. I have a failure in my history with a company called Eye Contact. It's part of my story. It's super painful, but it made me a better entrepreneur. So I think people need to learn to accept failure. We need to celebrate it more. I'd love to write a book about it. If you ever want to write a book with me, we should write about the failures
Let's do that.
because I think what's so exciting is the lessons and the failures are much
Yeah.
more interesting than the lessons and the successes.
I love acronyms. They help me remember things, and I always remember the acronym of FAIL, which is first attempt in learning. So
Yes.
that could be the title of our new book, David. I think there's a public commitment here now. So
It's a public commitment to explore it with you.
that's absolutely to have another follow up email exchange. Absolutely. Um, you've had such an incredible and continue to have an incredible career. You're a father of three kids. I know you're involved in lots of not for profit work now. You do a lot of work in the charity sector. Can you share with our audience three timeless takeaways
For any sort of business, timeless
for
takeaway.
anything, for what you would share even with your kids?
Yeah, well, I have shared these things with my kids, actually. The first one, I think, comes from one of the best characters, actors ever in any movie. It's this guy named Yoda. And he said, do or do not, there is no try, I really believe that's some of the best advice I've ever heard from anyone. and I've applied it, and I've repeated it to so many people. I mean, it's just there's so much wisdom in it in so many directions. But do or do not, there is no try. You know, you're doing a thing. Your language matters. You're not trying to do it. You can decide not to do it, right? But you shouldn't try to do it. You should do it or not do it. And it really drives a lot of behavior. And people hear we're going to go do this versus we're going to try to do this. So that's one. Two, you've heard a lot and what we talked about today. I think, surround yourself with great people. The employees, the board, the investors. If you're an entrepreneur and you're starting out, like the last thing you want to be is alone. There's just so much knowledge in the community and shortcuts in the community. And it's one of the reasons we built what we built. And I'm sure it's why you're building what you're building.
Exactly.
So that's another one. And I guess the third would be focus on what you can control. I say this to my kids and my startups, not my startups, but the startups that I work with. Um, that you can't control everything. Is this person going to be elected president or not? Is the stock market going to crash? You have no control over that, but you can focus on what you can control, right? And that's where you should put your energy as an entrepreneur. So there's three for you.
Oh, I absolutely love those. I think I'd rather write a book around company maxims and timeless pieces of wisdom. I think would
So
be
another one,
much.
we'll do the big book of startup acronyms. Yeah,
Let's
let's
do
do it.
this. So, speaking of doing things, what is next for you?
Well, other than the books, um, I'm still heavily involved in Techstars. I spend most of my time there, and I help a lot with capital and with the strategy and supporting the CEO and her team in the business. But I do have a little bit more time to do other things these days. So I've really started. I'm an investor in a lot of venture funds and things like that as well. But really started to get outside that space, and I've just kind of thought about my other passions, and one of them is tennis. I'm a big tennis player. I played Division One college tennis 100 years ago, um, and still play 3 to 4 times a week. And I just decided I want more of that in my life. So started organizing trips to go to different countries and play different styles of tennis. For example, going to Spain and playing red clay tennis in Madrid, Barcelona, Valencia. So just trying to do that with friends and organize matches in those communities, go to pro tournaments, things like that. So that's a little bit of fun stuff in my life. I'm also gotten really into an adjacent sport called paddle or padel, which if you're
Played it? Yeah.
anywhere in Europe or anywhere not in the US, you know well. And I've started playing that. Love that. As a tennis player, it's a really fun sort of switch or change, and I'm bringing that sport to Colorado and to the U.S. through some investments I'm making as well. So kind of just branching out a little bit from the tech space.
Amazing. So you're going to become to tennis what Reed Hastings is to skiing, I think, in the context of Powder Mountain.
I don't know. I would never hold myself up to Reed in any comparison, but maybe a little.
Brilliant. Uh, I have absolutely loved this conversation today, David. I want to thank you for the humility in which you deliver such incredible wisdom and for sharing so much value with our listeners today. I wish you every success in everything that you're doing. Undoubtedly, our listeners will want to find out more about you. So, where best to signpost them?
Techstars.com. My personal website is davidgcohen.com. I like to say if you're trying to find me, David Cohen of Techstars, and you can't find me, you're probably not looking very hard because it's pretty easy. I'm on all the things, usually at David Cohen. So definitely encourage people to reach out to me however they would like to do so.
Yeah, indeed. And look, I encourage our listeners to go and grab a copy of your book, Do More Faster, and indeed visit your podcast. So, David, look, enjoy the upcoming tennis trip, and I really look forward to staying in touch. Take care.
Thanks for the time. Great to be with you.